Hello and welcome to Morning Trade with Moneycontrol. I'm Sumaira Abdi and I'm going to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So keep commenting on our live feed and we'll have it addressed by our guest in just a little bit. But before that, let's see what's happening in the global space. The big global news overnight is that the minutes of the May Fed meeting have indicated faster and higher than anticipated rate hikes. And they say this is likely to fight inflation. The FOMC may also have to move to a restrictive policy stance to fight rising prices. Wall Street did see a rally with Nasdaq leading the way, setting indices up for the first positive weekly close in the last 7 weeks. But overnight, though, the stock futures have again dipped. Some of the earnings have been quite disappointing, and because of that, we have seen the stock futures in the US dip. Asian markets this morning, though, are suggesting, some green on the screens there. And the SGX Nifty also indicates a positive start for our own market. So that's the global handover. But let's, talk about what's happening in our own market today. Shivangi Sarda of Motilal Oswal Financial Services joins in for a quick tech check. Hi, Shivangi. Morning. And, it's F&O expiry today, and the month has been quite brutal, right? The Nifty has lost, 6.5% in May alone. How do you see, trade panning out today? And, where are things headed from here?
Good morning, Samara. So, today is the monthly expiry for this series, and we've seen, Nifty has been brutally in the grip of bears for the entire series. And as we move ahead today for the monthly expiry, we've seen that, there has been a lot of grip of the call writers at higher zones, which is restricting the upside. So Nifty is likely to remain in a range of 16,000 to 16,400, while 16,250 being an important key level over here. And somewhere, the India VIX is high above, 25 zones, which is giving discomfort to the bulls and paving way for the bears. But 16,000 is also acting as a crucial support, which we have seen that, is being retested again and again. So somewhere there has been a, tug of war between the bulls and the bears. The put call ratio levels have also been decreasing the entire week, which suggests that call writers are intact with their position. So a hold, below 16,000 would again pave way for the downside move. But, a bounce back move is expected towards 16,250 zones with the, situation in the global markets right now with the positive opening. So we do expect a little bounce back move over here.
Okay, I think our queries have started coming in from our viewers, and I think the first one is on the Nifty Bank. What are your targets there?
So looking at Nifty Bank, it remained resilient for the first half of the session yesterday, and it was outperforming from the last 4 sessions. But towards the end, we also saw that it gave up all its intraday gains and it surrendered its strength. But with the kind of movement and a positive opening today, we are expecting Nifty to also move ahead and move positive. So somewhere 34,750. We are expecting that it might go, and on the downside we will be keeping a close watch on the support level of 33,750.
Okay, so Praveen, I hope you got your answers. So let's start talking about some stocks now. And, there's been this flow of earnings. Amongst them, Coal India, I mean, that's a stock that has had a fabulous year, right? I mean, 23% higher. And in terms of their earnings as well, fundamentally, the news is that, they have delivered a good beat against expectations this quarter. And it's a realization-driven beat this time around. But Shivangi, and by the way, they've also declared a dividend of 3 rupees a share. In terms of, upside for Coal India, where do you see it headed?
So looking at the chart structure of Coal India, the weekly setup indicates a little bit of whipsaw, it's a zigzag pattern. But of course, if we look at the daily frame, there has been a little resistance at 185 zones. So once it surpasses this zone, there will be strength in this counter and it can move up to 190 zones. But till it holds below 185, we should keep a close watch and put a stop loss of maybe 178 zones.
Okay, the next query that we have coming in is from Kamal Raja R. And he wants to talk about these IT stocks, which have really been the talk of town. He wants to know if it's a good time to accumulate stocks like Wipro and Infosys.
All right. So looking at IT stocks, these stocks, the entire sector pack has, witnessed quite a sell-off from the last 2 months in a row, and there has been a lot of short built up over here in this space. So I would, recommend that we could wait, for a more downside over here in the IT stocks, especially the, heavyweights names. The mid caps have already, beaten down quite a lot, but we should wait for some more time before entering into the buying zone in these stocks. Apart from this, we could actually shift to banking stocks because looking at the sector rotation shift right now, banking stocks would be a better pick in this current market scenario than the IT stocks.
Okay, fair enough. Next is BPCL. So over here as well, earnings came out last evening. Numbers are definitely lower than what was being estimated. In fact, their GRMs, the gross refining margins, have come in at just a little above $15 a barrel compared with estimates of $19 a barrel. So that's a big miss. And, that's one of the big things we track for BPCL. And this morning, Jefferies has cut their FY23 estimated EBITDA by 50%. As well, CLSA has cut the target on the stock to 435 from 480. So, Shivangi, you too see some more weakness ahead for BPCL?
So looking at the weekly chart of BPCL, it has surpassed its crucial support of 325 and it is trading, below that. But somewhere, there has been a lot of beaten down. We've seen from the last 3 to 4 weeks, the stock is consistently, cascading downwards. So I feel there has been loss in momentum over here. So we should actually wait if we want to buy, and because I see a little more downside over here, which is coming this in stock.
Okay, in fact, Vijay Pawar had asked this question as well. So, Vijay, I hope you were listening in to the answer. Shubham Srivastav wants to know about metal stocks. And, over here we've seen since the government announcement came in on, their efforts to fight inflation, a lot of these stocks actually took a beating. So, JSW Steel or Tata Steel, what he wants to know is which is a better choice for the longer term.
Right. So looking at the Tata Steel and JSW Steel, I'm looking at the entire metal space actually. This sector has also taken a hit, and we've seen quite a lot of heavyweights which have been breaking its support zones and moving lower. And there have been quite a lot of OI built up in these stocks in the short side. So we would recommend we should wait here because I would see a much more downside over here. For the longer term, of course, I feel Tata Steel is a much better bet over here. Although both the stocks, JSW Steel and Tata Steel, are both, counters of strength for the long term, of course. But we should wait for a more downside to start accumulating these stocks.
Okay. InterGlobe Aviation is the next stock on my list because over here the earnings were, a bit of a mixed bag. What surprised on the upside was the very strong yields that came through. Revenue growth too of nearly 30% was good. But the operational performance was a bit weak this time around. In terms of what the brokerages are saying this morning, Credit Suisse has cut their target price to 2,200 from 2,500. They still have outperformed. Has cut their target price to 2,200 from 2,500. They still have outperform rating. And JP Morgan has upgraded the stock to overweight and raised the target price to 2,000. Shivangi, for InterGlobe Aviation, what are the charts telling you?
So looking at Indigo, the stock has been quite a lot of, facing a lot of volatility within a range. And I feel, looking at the setup, 1600 should be a make or break level. And, if it takes support at 1600, it should bounce back and, move higher. But if it surpasses 1600, it might, pave way for a more downside because currently it's trading below its 50 exponential moving average. So somewhere the stock is in a little bit of a weakness, but with the kind of global scenario, if the market picks up, these stocks should also gain strength again.
Okay. We have a query coming in on HDFC Bank. Mayank Modi wants to know, is it a good time to buy? And, this is a stock that has corrected this year about 10%. Even this month, it's lost 4%. Would it be a good time?
So HDFC Bank is quite promising right now because on weekly frame it has made a kind of a bottom and it's it is turning from its previous support zones, which is looking positive for the stock. And looking at the overall chart structure and the kind of strength in the banking counters, this stock should move, and do well. But I'm afraid there will be some kind of a little momentum over here, slow in, momentum. And in the banking space, I am liking, ICICI Bank or, the other names more than HDFC Bank.
All right, makes sense. The next query is on some PSU banks, and Purandar wants to know your view on SBI and Bank of Baroda. Both the stocks, have had a very, very challenging month. But are they in zones now where they can, somebody can begin to accumulate?
So looking at SBI, and the stock has quite a lot of faced a lot of beaten down and weakness in this in the series. But even when the banking stocks were strong and private banks were performing, we've seen that PSU banks have not been performing up to the mark. So somewhere I see a little bit of a setback over here in the PSU names. But of course, SBI is a good stock and we could start accumulating. But I feel there will be a little more downside to 445 levels. So, from those levels, we could start accumulating the stock if one has to.
Okay. One of the stocks which is, ending this month in the green is Apollo Tyres. On a monthly basis. Arun Srinivas wants to know what is your take? What's the upside here?
So, looking at Apollo Tyres, of course, weekly frame it is trending upwards, and it's moving ahead of its important key moving averages on daily as well as weekly frame. So, looking at this chart structure, it sustained above its resistance zones, previous levels. So, somewhere there is a little bit of strength over here, but I feel once it has crossed 220 zones, now there might be a little bit of a consolidation over here. And once I would feel that we should maintain a stop loss of 205, and one can expect upside, but the upside will be little capped towards 226 to 227 zones.
Okay. Bata is another stock which is, quite a favorite with people. This time around, they've seen a mild miss in terms of revenues, but operationally, they have reported a beat. Chartistically speaking, where is the stock headed from here?
So, looking at the entire FMCG space, the stocks have been quite volatile this month because, of course, defensive have been on the play. But looking at Bata chart structure weekly, it is, turning from its support zones. So it's somewhere turning positive, but daily is not indicating a really good sign. So I would say, positionally, the stock looks good, but right now on a, daily basis or maybe intraday basis, we could wait for a little more, consolidation, negative to range bound bias. But on weekly, of course, it's positive and one can act according to their time frame.
What about, there are two more stocks I want to actually talk about because we have a query that has come in on Hindalco. from Ashish Kumar Jha. I know you spoke about the entire metals pack, but in particular Hindalco and also Nalco because they reported earnings. So for both the stocks, what is the target you have?
So, Hindalco, looking at the chart structure, I feel, if this stock crosses 420, then it might see, a good upside. But of course, there has been a lot of weakness in the stock, in the entire series. So, a hold below, 380 levels would see a more downside over here. So, these two levels are important to play with, and one can, have a look at this range for the coming sessions.
Okay, and Shivangi, what are the stocks that you're looking at for today's trading session?
So my picks, in this kind of volatile scenario, one is from the banking space, which we discussed. It's HDFC Bank. So it started to move higher after making a good base at 2100 levels, and it has also negated, its lower highs of the last 6 sessions and
Sorry,
surpassed its
Shivangi, you
immediate
mean
hurdles.
HDFC Limited?
HDFC Bank,
Okay, I think we've got,
HDFC Limited, sorry.
yes, HDFC Limited, right. Okay, please go ahead.
Yeah. So I feel this stock is really going to do well. And the second pick is HDFC Life. It's making higher lows from the last 4 sessions, and it's making a strong bullish candle on weekly frame, indicating there has been a very strong grip of the bulls in the counter in this last week when we saw a lot of volatility and whipsaws in the broader market. So this stock really looks good, and I feel there can be a target of 590. We can maintain a stop loss of 560 over here.
All right.
And my third pick will be TCS from the IT space. We've seen a lot of weakness in the entire IT space as we discussed, and TCS especially has seen a breakdown of the last 40 weeks. So the stock has inched lower below its crucial levels, and a breakdown on the weekly scale has made path for a more downside. So the momentum indicators has also turned into the selling zone, and overall it has been in a negative territory, which can take the price lower. So I feel there is potential downside towards 3040 levels with a stop loss of 3239.
All right, Shivangi, thanks very much. Have a good trading session. So that's where you can look out for in the market and the stocks which will be in focus today. But earlier we spoke about the minutes of the Fed meeting, and let's circle back to its impact now. Gold prices have dropped and they're on track to snap a 5-session winning streak weighed by a rebound in the dollar. So on what's trending today, let's talk about gold and whether it makes sense to add on. Kaizad Ajania joins in. Hi Kaizad, morning. Good to see you in this early. A lot of people say that in somebody's portfolio, use gold only as a hedge. And yet there are enough number of people saying that, it's part of your, your investment assets. So where does one, how does one look at gold? And is it time for people to be adding on? Okay, I think you're on mute, Kaizad.
Hi, Sumera.
Hi, good to
morning.
go.
Can you hear me now?
Yes.
Okay, so Sumera, see, as far as your question is concerned about how to look at gold as an asset, basically gold ideally should not be looked at a wealth creation asset, which many people, look at gold that, should we invest in gold now that the gold prices are rising, or should we sell gold now that the gold prices are falling? So ideally, when things are volatile, when equity markets are volatile, hugely volatile, when, in times when economy is not doing well, or in times when there is a geopolitical crisis like the ongoing Russia-Ukraine crisis, or, in the past 2 years when we had, the global economy is struggling due to the onset of COVID, those are the times when your equity asset classes and your debt fixed income asset classes become highly volatile. In those times, gold needs to be accumulated because gold seldom loses value in these kinds of uncertain times. And it is basically a hedge against volatility, I would say. So, instead of looking at the point from the point of view of accumulating gold at different points in time, or selling gold at different points in time, you need to have something about, I would say 5 to 10% of your assets in gold at all times. Look at gold as basically as a safety asset. Don't look at gold as a means to increase your wealth, or a means to, make high returns, or an asset that you feel might really outperform equity and debt over a long period of time. You need to have about 5 to 10% of gold. Don't overstuff gold. Don't overstuff your portfolio with gold. Or it's also unwise to not have any gold allocation in your portfolio.
Yeah, absolutely. And, especially given the volatility. But I think for people to be able to better understand this point, can you explain the relationship between, gold and the rest of the assets? I mean, why is it that we consider gold to be a hedge?
See, basically, when equity markets, are volatile, equity markets get, inflows and outflows from, investors, depending on how they view where the markets are going. And, they are dependent on various, factors that are affecting, whether they are affecting, the liquidity. Hello?
Yes,
Hello?
Kaizad. We can hear you, Kaizad. Go ahead.
Yeah. So, see, basically, when you invest in equity markets, you invest depending on, how your, hello?
Okay, I think we've lost that link with Kaizad, but we will connect. So basically, the point that he was trying to make was that, when the equity market sort of rises, gold, the attractiveness of gold becomes less. And when the market falls, the attractiveness of gold rises, and which is why you tend to use it as a hedge. But Kaizad is back with that. Kaizad, given the concerns around the US economy, and, of course, we have the Russia-Ukraine war going on. What kind of an impact might it have on gold?
See, right now, in times of when the Russia-Ukraine crisis happened, the gold prices actually spiked because, there was a lot of uncertainty at that point in time, and we did not know how big the Russia-Ukraine crisis would go from there on. So there was an immediate spike in the gold prices. But if you see, the gold prices haven't yet stuck to, they didn't really stick to, the script. So, we thought that, the Russia-Ukraine crisis would really, it could have escalated and could have envelop more countries, but it did not. So, that factor, and the fact that the US also raised interest rates. The US have been talking about, you said in the start of this show, the FOMC minutes also indicated, high rises of forthcoming increases in the interest rates, which would be quite sharp. So, money has been flowing from emerging economies to the US economy, and that factor itself has halted the run of gold, and which we have seen that gold prices haven't yet really taken off, in the sense that they haven't been rising consistently despite the ongoing Russia-Ukraine crisis. So yes, the increase in the interest rates and the fight towards inflation will halt the run of gold prices in the short run. But if the interest rates, if the inflation runs away, and if the US has to raise interest rates a lot, and if that has an impact on the US economy, then maybe gold prices can take a U-turn a little later. And which is why it is always, I would say that, don't get spooked out because gold prices haven't been rising. Gold prices have been a little buoyant in the past 2 months. So it is a good time basically to accumulate a little bit of gold. And as I said, have about 5 to 10% of gold in your portfolio.
Got it. And of course, paper gold being the preference. Kaizad, thanks very much for joining in. So that's about all we have in this edition of Morning Trade. Do stay tuned for markets with Santo and CJ, which comes up next. For now, we leave you with some highlights of day 3 of Money Control in Davos. Have a good day.